Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Tuesday morning pre-market webcast. All right, so say hello to 2200. I mentioned in the room yesterday when we held we did a morning dip yesterday down to like 84.75, and they were able to hold the opening print in the regular session, which was in 85 and change. They were able to hold that as support, and as we grounded up towards the 2190s again, it became very apparent. I was saying that we were going to take out not only the futures high but the cash high, and at that point, big numbers like 2200 tend to be magnetized, and the market needs to print those numbers. It needs to get them out of their system. It's like there's a brand new pair of shoes right there, and you got to try them on. Or there's a shiny car in the driveway, and you got to take it around the block just to see what it feels like inside of it. So we've traded as high as 2203. We're back down to 21.99 quarter. There's literally no significance in that at all. What's going to be key today for me is if we get back down to 21.91 half, which was the old all-time continuation high. If we get back there, if cash gets back to its old high, because it's going to gap up unless there's something that really dramatic happens in the next 90 minutes. How does it react to the old high? The bulls have converted everything they've needed to convert since election night and limit down. If they hold the old all-time high, if they can hold 21.91 half, then that's something else that they can build upon for the next grind higher. I mentioned in the pivot report yesterday morning, there's going to be no meaningful pullback without news, no meaningful pullback without converting the weekly pivot, which is down at 21.73 half essentially. It was never threatened yesterday. I mean, it never came within 10 handles of being tested. As long as we have no interest in going to see the weekly pivot, and we have no interest in even closing below the opening prints of the regular session, then you're going to continue to see dips being bought and the grind higher happening. I said yesterday very emphatically, it's buy the dips mode. It's a holiday week. Unless there's a news bomb that can not only rattle the market, but to keep it rattled, you're going to see dips be bought. You're going to see it grind higher. It doesn't matter if you think it's too high. It doesn't matter if you think it's come too far. It really doesn't matter. The reality is a lot of the election got worked off here over the 11th and the 12th, and then we made it up above this trading range, hung out for a couple of days. That worked a little bit more of the parabolicness off, and now we're making another run higher. Are we a little stretched? I don't know. The AD during the course of these days tells me that we're really not all that stretched. The fact that we're trading 2200 and we're at all-time highs, you always have to factor in, just how much farther it can go. But there's nothing happening on any of these charts, or nothing happening in anything that I look at that indicates that we can't do a little more. And if we can do a little more, then you have to be cognizant of the dips. You have to be there to buy them, and you have to ride them higher. We stayed out of the open yesterday, and we got short. We got short 90 for the move back down, for the dip down. But once the morning dip held, we got out of that and we got into a long that I felt pretty good about jumping out of. In the basically in the 93, 94 area. But I guess I could have held it for another 10. But I mean, you gotta you have to book your handles when you can. So it was a solid day in the room yesterday. I just want to put in another solid day today. Don't worry about where we are in the big picture during the day. Just focus on what price is telling you, and if it's telling you to buy dips, you got to be there. Now, what's the first indication that we're at a high and we got a problem? Well, you're going to see lower highs first of all. Then you're going to see lower lows, and you're going to start to see some of these areas, like the middle band on the hourly chart, is finally going to get broken. And it's going to hold. It would be also nice if the bears were capable of taking out a daily pivot every once in a while. You can see that they really can't, okay, and converting it. Then for me, the discussion point as far as a meaningful move down can't occur until we get below the weekly pivot, which is down here in the 73 area. And the Bears really can't accomplish anything until they can get below 2150. So they've dug themselves yet another gigantic hole, and it's a hole that they may not be able to dig themselves out of, anytime soon. They've given up a lot of ground, almost 200 handles since limit down on election night. So, you know, things that go up like this don't tend to do Wile E. Coyote off a cliff. Okay. Um, if you're a bear, if you're desperate to be short, first of all, I would say don't be desperate to be short. If it's going to pull back, it'll give you plenty of time, to get in. But what you need are little victories, like maybe a lower high that lasts more than 20 minutes, maybe closing below the opening print instead of above every day. Those are the kinds of things that the Bears can potentially build on, but I still think they need news. All right, everybody have a fantastic day. Follow us over at Twitter at Princeton Trader. Come check out the website. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.